Welcome back to the Investing on a 9 to 5 YouTube channel. It's your boy, the Dividend Dog, out there. Happy holidays and Happy New Year to all the subscribers and future subscribers out there. Wanted to give you guys a shout out also on liking up and watching the last video that we posted out on Rick, and also all the other videos that we posted. And also, any new subscribers and new viewers out there, don't forget to hit that subscribe button so you do not miss out on any future content. So, up on the screen here, we have Comcast, ticker symbol CMCSA, and we're going to be taking a dive on who they are, what they do, and why I am purchasing some shares in them and have a goal of getting 100 shares in this company. So Comcast is founded in 1963. They are headquartered in Philadelphia, city of the brotherly love and home of the Philadelphia 76ers. But Comcast, they do more than just provide cable to your house, and we're gonna uncover, what they do, like I said, and basically show you how this could be a potential add to your portfolio. And I'm going to show you some low risk, probabilities that they have on their balance sheet, and we'll go over the dividend income. But before we do that, we're going to jump right into who they are. So as we mentioned, like I said, they do cable as far as like Xfinity, but they are really diverse across the world. They do Sky over in Europe. They have Comcast Business. They have Universal, all of Universal across the world. So you got Japan, you got the Beijing Resort, you got Orlando Resort, you got Hollywood Resort as well. So as you can see, they are diverse over a lot of companies. So their biggest thing is obviously is their cable and Sky. They have 57 million customer relationships across the U.S. and Europe. Um, and within NBC Universal, which is another one of their segments, these are all the channels that they own. So CNBC, the Golf Channel, Weather Channel, USA Network, Oxygen E. We got Fandango, Sci-Fi for all the good movies that are on Sci-Fi. And we got Hulu. They're in half and half with Disney, which is awesome. MSNBC, for Squawk Box, and shout out to Jim Cramer and all those guys on that channel. So as you guys can see, Comcast, they is a company, once again, that I like to invest in companies that I use, that I see every day, and a lot of physical things too, that this company owns, such as like the Philadelphia Flyers. They are owners of that team. They are owners and they manage the Wells Fargo Center where the Flyers and the 76ers play. And then you also see on the right hand too, on Wells Fargo Center sign, is the Apple sign. So as you can see, Apple has its branding up there as well, which shows that Apple, once again, is another good company that has its branding all over. So diving underneath the hood of Comcast, so we'll take a look at their third quarter report card, aka the earnings report, and obviously on the page, and guys, and how I like to look at companies before I invest in them, as I look at their revenue, earnings per share, free cash flow, EBITDA, which is the earnings before interest, tax, depreciation, and amortization, which just shows how they can generate, how can they generate cash flow, basically. So all of those metrics have been increasing in the last third quarter, not as much as investors would like, but they are showing improvement. So as you can see, they're broken down by the three categories of the Xfinity, NBC Universal, and Sky. Revenue, EBITDA, and customer growth were all record highs and showed improvement from the previous quarters and year over year. So we're going to dive a little bit deeper, and we're going to look at their financial forecast. So this just breaks it down once again, from a revenue, earnings per share, evaluation standpoint. So like revenue is up 7%. Revenue next year is expected to be down 1%. I'm not sweating that at all. I'm long-term, looking 5, 10, 20 years down the line. It's 10 years minimum. I don't even know why I'm speaking 5. That's short-term talking. But we're going to look at earnings per share is up 22.65% this year. Next year, with the revenue being down that 1%, as you can see, earnings per share is only going to go up, a percent to 3 point, or not a percent, but to up 3.8% from this year. So revenue from 2017, we're going to go down, has been increasing. So we got it all the way up to right now at 124.96 billion. And then next year, we're going to, like I said, take that dip down to 123. But I'm looking 24, 25, 26, and how the company is looking to perform down the line here from an earnings per share standpoint. And as you guys can see, 2024, I got the blue box here. It's going up to 4.34 in 2024 and on up to 4.92. The only way those things can be predicted is by by good revenue, good free cash flow, and it's a strong analysis number of analysis that are having solid predictions on the next 3 to 5 years of this company. So this is the earnings per share growth from a 10-year metric. As you can see, it's taken its dips, but it's also zooming out. The trend is your friend, as they say in the investing community, and it's on a positive trend in the last 10 years. Obviously, it's on a dip right now, but buying in at a lower value is what, value investors, dividend investors do. We find the value by uncovering a lot of the things that some of your average investor may not look at, but we'll show you here on the channel here. So by looking here, as you can see, it does take a dip down at times, especially during COVID, but it also has made a strong recovery. Takes a dip down here in 2022, and it's make it a strong recovery. So taking it in now, revenue is still, like I said, revenue is growing, earnings per share is growing. It's just right now the growth in the market right now doesn't see it as a market pusher right now. And the market obviously is down as well. So this is free cash flow. Free cash flow has been going up, and especially from 2020 to 2021, went from 11.1 billion to 16.1. But as you guys can see from revenue, it will be taking a dip down, which shouldn't alarm investors at all. I don't think so as well, because you can see in 2015, it took a dip and started making back-to-back increases there from 2017 and 2018. Cash flow per share, even though the free cash flow is going down, but the per share of it is going up. So right now it's going to be at a 4.47, and next year they're expecting it to grow and increase even more. So this is EBITDA. Once again, this is earnings before interest, tax, depreciation, and amortization. And once again, it is also on a positive trend. And this is the dividend grade. We're going to look at the dividend now for Comcast. Right now, it is down negative. We're down 31%. Down at 35.05 is the ending price for it. And dividend grade right now on Dividend Tracker is at 76. So it's right and a good threshold for the dividend safety net here for us to maybe add it to the portfolio. Once again, not financial advice. And these are the recent dividends over the since 2018, as you guys can see. Positivity as well. So the blue is the dividends per share has been increasing, along with the yields have been increasing as well. Now, you guys remember the yield and the price are inverted with each other. So if the yield is lower, then normally mean the prices are higher. And if the yield is high compared to where it's at now at 3%, more likely the price is low. So it means that, even though the price is low and the yield was low as well, dividends per share and the amounts were paid, have been increasing over time, which is a good sign. Diving deeper into the charts on the technical analysis standpoint, this is pulled over from FinViz. This is free. You guys can go type in your favorite stock or whatever stock you're looking at, and it'll pull up all of these metrics here for you guys at free of charge. But just looking at it, like I said, Comcast closed out around like $35 here on Friday, and right now it's at a consolidation standpoint from what I'm looking at. Let me know in the comments if you guys think I'm wrong. Could be wrong with it, but it means that the market, it has no idea what it wants to do. If it doesn't know if it wants to go down or go back up. But from October here, looks like about October 15th, it has made a huge bounce from $30 all the way up to 34. So once again, by looking at charts and being able to analyze it a little bit deeper, guys, you can find yourself buying at this lower part here and being able to take on some of the capital gains that comes with it in this run here. So, Comcast right now, it could go back down to 34, it could go back down to 32, but I still think it's undervalued for what Mr. Market is pricing it at. So the next chart here is going to show you the price versus the fair value. This is pulled over from Morningstar. Fair value, they have this thing priced at $60. Once again, its last closes was at 34.97. So it's definitely, once again, guys, undervalued compared to what the metrics are showing, compared to what the balance sheet, the way the dividend's been growing. The market is definitely undervaluing this right now. This is how Comcast is in the news. I like to go out and look at how the companies that I invest in or look to invest in, how they are in the news and how they are in their community. Comcast is actually very vibrant in their community, very visible. They have been partnered up with Project Up is one of their missions. They're investing $1 billion over into this organization. It's a nonprofit organization over in Philly. They're going to, invest $1 billion again into that to provide people, with skills and resources and opportunity needed to succeed in the digital world, because Comcast knows obviously this is where the world is going. Such as they'll be learning internet essentials, Comcast Rise, which is another company that they was awarded $2 million in grants to help small businesses in Philadelphia and Chester, Pennsylvania, to help with them with technology makeovers or marketing resources. So it just shows you that they're in the community, taking profits from the company and putting it back into the community, and showing that the community will also in return down the line be profitable for them, because they're showing them the necessities that are needed for what they will be expanding into. So it shows you right down here in the bottom that they're testing already testing their first 10G modem technology, delivering mega or multi gigabyte speeds to homes. So they're also been the first to do that, and showing you that they are working on things 5-10 years down the line. They're taking their research, they're taking the time and effort to have a strong balance sheet, a strong management team, a strong employment to go out and to be able to work with the community. So it just shows that I like Comcast is vibrant. Once again, they don't just provide Wi-Fi to the home, they are a very expandable business. So we're going to talk about some of the big guys who owns Comcast besides the dog here. So we got Ken Griffin. He's Citadel Advisors. He's one of the guys I watch a lot. As far as big time investors who are buying, besides like Warren Buffett and Charlie Munger and those guys. So it looks like the last quarter, these guys have been adding millions of shares of Comcast. And that if they can see the value of this company, they look at the same analytics and the same numbers as you and I look at, and they're just playing in a bigger pool of money than we are, but we can still take our $100 and grow it as well, or take our 1,000 or however many shares and be able to have produce some type of income for us down the line. Something that's better than nothing. So if we were to purchase 100 shares right now, which will be around 34.66 or $3,466. The average dividend yield for Comcast right now is 3.09, and the average dividend per share that they pay out per year is $1.06. So per share, they would pay out $1.06 a year. So every 4 months. So divide that up. So that's around like 26 cents. You can say that. And over the last 5 years, they've increased the compound annual growth rate of the dividend is 9.87. So in 5 years, if you never invested another dollar, and if you purchase 100 shares, your total invested in 5 years would be still the $3,000, but your portfolio value would be at $5,000. Your annual dividend income would be at $178. So it will go from 106 in year one to in 5 years to 178. Now, if you go all the way down here to 20 years, look what happens. You'll have a portfolio value of $37,000, and it'll be producing an annual dividend income of $1,149 annually for you, and then so on down the line. And then, for all of our early investors out there, for all, people who are in their early 20s, teens, if you're looking down here at the 40, 45 year range, if you do in 40 years and you're 20 years old, you're still looking at 60 years old with this type of money producing for you just by buying 100 shares now and never touching it. Now, if you were to invest it every single month, obviously these numbers will go up dramatically due to compounding interest. But this just shows you guys just basic on how compound interest works again, and just how your money can work for you better than sitting in a savings account. And just to forecast the stock out, once again, we got heavy stock analysis on Comcast. We got 45 stock analysis on them. The average 12-month stock price right now is at $43.61, which is a 20% gain right now. If you were to go all in and purchase it, and get you a couple shares and add it to your portfolio. Once again, not financial advice. It's got a strong buy here, and then once again, you got it going up the highest at 73.50 down the line December 2023, which will be, purchasing it now will give you 110% gain. And that's Comcast right there for us, guys. Once again, Comcast, they do more than just provide Wi-Fi and cable to your house. As you guys can see, they are spread out in the theme parks, the sports teams. They're in the communities. They're doing 10G. They're getting ready for the future. It's a low price stock here. It's a strong buy in my book. Once again, not financial advice. I do have 20 shares. Once again, I'm going to go for 100 this year to close it out. But we'll see how that goes out for the year. But once again, guys, this is a Dividend Dog. I thank you guys again for joining me on a video here on New Year's Eve. Hope you guys have a great New Year's night, great New Year's. I hope to get you guys joining here on the channel here for the future. Nope, don't like that. All right, guys, and that is Comcast. As you can see, Comcast does more than just provide Wi-Fi to the house. They are spread out throughout the theme parks and within the sports teams and the community. They're preparing for the future. Like I said, guys, this is a buy here in the books. The big boys are loading up on it as well. I'm going to continue to buy it as much as I can. Once again, my goal is to get 100 shares in the stock here, because I do think that it can perform. And once again, people need cable and Wi-Fi, so I definitely can't see why this company can not be around. So, and that's Comcast for you guys. Ticker symbol CMCSA. This is the Dividend Dog here on the Investing on a 9 to 5 YouTube channel. I hope you guys had a blast here joining me here on this warm and cold New Year's Eve, wherever you guys are at. I hope you guys have a great New Year's Eve and an even better New Year's. And I'll look forward to seeing you guys here on the next video. See ya.